Welcome back to the program. You're watching Bottomline East Africa. Let's switch gears, or let's stay with business, shall we? And East African Breweries continues to toast to its success as it saw net profit rise 67% to 7.7 billion Kenya shillings. On the back of this was the resurgence of the Senator keg business after the brewers struck a deal with the government to lower the excise duty on the beer. But while the company saw success in Kenya, operations in Uganda, Tanzania and South Sudan registered slow growth, forcing the company to re-evaluate its business heading into the second half. Our business editor Michael Karanja had a chat with the EABL Group CEO Charles Ireland for his assessment on the performance and how the company is positioning itself to grow its profits. Here's a section of that one-on-one interview.
Overall, there are kind of quite a lot of challenges in the world today, and East Africa isn't shielded from those challenges. I think global commodity prices have dropped. I think the hydrocarbon prices have dropped. We're seeing China, which is a big kind of driver of global economic vibrancy, is kind of declaring kind of reductions in GDP growth rates and stuff. And I think the world is seeing kind of some kind of turbulence economically, and I think East Africa is getting its fair share of that, which is leading to some market challenges. And in Uganda and Tanzania and South Sudan, those challenges have been most pronounced. In Uganda, we're actually growing our market share in Uganda. In Tanzania, we're growing our market share. But the markets are so challenged that that's not enabling us to deliver the sort of growth that I would ideally want in those markets. And when you translate our revenues, which are captured in local currency, back into Kenyan shillings, because Kenya has been relatively more stronger than Uganda and Tanzania from a currency perspective, then that impacts on our kind of revenue based in Kenyan shillings. And then South Sudan is a whole new story on top of that, and we all know the very serious issues that the South Sudanese population are facing with the civil war, unrest, and the impact that that's had on the economy there. So I think it's kind of global translating into kind of regional economic challenges, and the big kind of exception to that from our perspective has been Kenya, where there have been a number of things that have happened which have helped us kind of post some very healthy volume growth and revenue growth. Without being disparaging to Tanzania and Uganda, I think that Kenya is a more stable and robust economy than those other two countries in our kind of patch, and because of that stability, I think that our market is more stable. So if I kind of take Senator out of our numbers, the rest of our business grew by about 6% in H1, and I'd expect that sort of growth for an economy where the GDP was growing 5 to 5.5%. I'd expect about 6% growth, because we should be shadowing GDP and maybe a little bit more, maybe 1 to 2% more than GDP. So if I take Senator out, then we were shadowing GDP, and that's about right. You put Senator back in, and obviously our growth was significantly above that, and that was because, as we talked about last time we met, the Senator had declined very significantly because Senator consumers are incredibly price sensitive, and when the government took the decision to put excise tax onto Senator, it affected the affordability of the product, and consumers decided to stop drinking it.
And if you just look at different markets, I've seen something interesting come out. I think it was Mozambique or Angola, where even looking for different products to manufacture beer, where people even turn into things like cassava
Yeah.
So there's also sorghum. So as an alternative to barley, are you looking at other
Yeah,
kind of products to add on
absolutely.
to,
And
to the
in fact, we
manufacture?
already in Uganda we have some of our brands include or use cassava in their recipe. As you know, we've got sorghum for Senator here. We've got sorghum for some of our brands in Tanzania as well. And you know, for me, it's not necessarily. I don't really mind so much about what the base kind of cereal or carbohydrate is in our brands. I'm really interested in making sure that the taste of the product is really good. And quite often, it doesn't matter what base ingredient that you've got. If you've got the right brewing techniques and the right quality control, consumers will have a very enjoyable product. And on top of that, as again we talked about last time, I think we have an explicit strategy towards local sourcing wherever possible. Yeah. And we've shifted to over 80% local sourcing. And I think that that's an important part of the mix of our success over the last couple of 3 years, because it shields us from the international currency valuation impacts, and also it helps grow economic vibrancy in East Africa. And you know, I think that that's part of our role as a big business in East Africa. We should be doing that stuff.
What was the conversation like with government over the last 18 months, especially when it was around the taxation around Senator? And then the second question to Senator is, what's the kind of revenue share between yourselves, the farmers, and the whole value chain of whoever's involved with the Senator product?
Yeah, so look, we were one stakeholder in that, in the decision by government to increase excise tax on Senator. And our revenues were impacted. As you know, our profitability less so, as I also talked about last time, because we didn't make a lot of money out of Senator. We had quite a big revenue in Senator, but we didn't have a lot of profit, because by very nature of the product, it's not a big profit generating segment for us. However, there are other stakeholders who were impacted, you could say, significantly more than us, because whilst it affected a proportion of our revenue, like 10% I think it was, it affected 100% of some retailers' revenue and 100% of farmers' revenue. And you know, we're now operating with, as I said, 22,000 farmers here in Kenya. We were unable to renew contracts with farmers because there was no demand for their product. So the impact for them was really, really significant. So yeah, we were one stakeholder in that kind of matter, but not the only one. From a government perspective, I think the government analysed the impact, and they took a decision which they thought would have one outcome, and then they analysed the impact, and it obviously had a very different outcome, where because the volumes had fallen so dramatically and the whole kind of route to market chain or value chain had been affected so significantly. Overall, I think that it was value destroying decision for government rather than a revenue raising move, and therefore I wasn't surprised that they took the decision to lower the excise tax again. And I think that as we've said, the role that Senator plays in creating an affordable alternative to illicit, the role that it plays in kind of generating activity for farmers and for distributors and for retailers, I think holistically very good decision, and one which we're very happy to support by making sure that we produce and kind of service the market.
Another question I have to ask you has to do with perhaps your route to market strategy. So OPEX actually increased, and there's a lot of perhaps you're talking about increasing perhaps the way you get products to consumers. So when you look at that vis-a-vis how you're able to increasingly sustain your increasing revenues, how does that play? How does the marketing end lead to increase in volume and revenue?
Yeah, so look, I think businesses are best managed holistically, and we're very careful to look at all of the elements of the business, both individually and as interdependent parts of the business. So we work hard to try and do the right things from a route to market perspective, the right things in terms of working with distributors, making sure that they're set up with systems and processes and ways of working which are effective, to have good relationships with retailers, to make sure that they're aware of the most popular brands for their kind of market segment, and make sure that they're pricing their brands appropriately, and the consumers are aware of the brands with kind of visibility items in the outlets and stuff. And then we have a philosophy of kind of constantly reminding consumers that our brands are available, and that of the nature of them, that they're good quality, and they're kind of modern and what have you. So we work across the whole to try and kind of make sure that if a consumer is looking for an alcoholic beverage brand in East Africa, that they choose ours ahead of any of the competition.
Are you going to perhaps think of increasing what you're able to dispose, just to more or less balance the books at the end of the day?
No, we're not. So when I came here about 3 years ago, our balance sheet was really, really stressed, and we had kind of challenges on kind of our cash position, and it needed restructuring. So we developed a plan to restructure our balance sheet and to invest in our business, to make sure that we captured as much growth